What is the ETF? And then we'll get on to why is it benefiting.
Sure. Thank you so much for having me. So what our ETF does, IBIT, is it gives investors access to the inverse performance of some of the stocks that are correlated to or best represent the crypto ecosystem. So for example, stocks like Coinbase, Galaxy, MicroStrategy, Block, Robinhood, these are names that are highly correlated to the price of Bitcoin, for example, and really popped when Bitcoin popped over the past year. But since Bitcoin has fallen from 70,000 to where it is now, these names have fallen in tandem along with the overhang of macro risk. So a lot of traders out there know about short currency Bitcoin funds and they get their exposure that way. But at Defiance, we thought, well, there's a much bigger picture here, actually, because there's so much contagion between equities that are related to crypto and really benefit from and generate revenues from crypto as it rises. So if that's going the other way, there's got to be a product to capture the short there, and that's what we're trying to do.
Okay, so what happens if the market takes a pause and we, over a longer term period, start to see both crypto-related equities and just more broadly digital assets rebound?
Yeah, so in that case, so what you want to do is you want to look at a fund like IBIT when you have the view that markets are going to fall or when you're looking to hedge your position. So if crypto starts to rebound, you can think about it as a hedge to have in a portfolio, or you can transition to another ETF like an NFTZ, for example, that is long all of those types of companies as well. So there are a few crypto ETF products out there. There are single stocks out there. Obviously, the investors can get back into like Coinbase and Robinhood, whatever they sort of like if their view is changing. But the point is that you sort of have tools that represent both sides of the trade, and that's really what we're striving to do, is to give investors access to those products. And they're typically hedge fund types of products, so it really democratizes this for the average retail trader who we know is highly interested in crypto.
And luckily, a lot of these are therefore publicly traded companies, publicly regulated companies. And I'm interested, though, Sylvia, what demand has been like for long the sector. You're someone who speaks much about where assets currently are trading, where they should be trading. You often take a view. From your perspective, are people about to expect some sort of pop back in some way?
Yeah, Caroline, and actually you just made a really great point there. So the other, benefit of looking at shorting equities versus just shorting a cryptocurrency itself is that it's going to take a lot of these companies a while to recover. So even if crypto starts to inch up, until the broader market recovers and tech recovers, companies like Coinbase, Robinhood, Galaxy, the companies we mentioned before, they're probably going to have a lag to crypto itself too, just because of the overhang of inflation and rates and things like that. So I think we have some time on this trade. In terms of investors coming in, absolutely, right? I mean, the time for value creation is when markets are dismal. But I think that because of FTX, and you started this, in the intro there, because of FTX, there's so much sort of apprehension to get back into the sector for some of the retail traders that dove in heavily until we get some regulation, until we get some clarity around, crypto and how the end investor is protected. So I do think that it's going to be a slow roll on this. Longer term, I'm fully bullish on blockchain technology, digital assets, and tokenization. But I do think in the short term that it's going to be a little bit tough, and you might benefit more on the short side than you will on the long side.
Sylvia, are you a bit worried about the lack of new ways in which to gain exposure from a regulated perspective?
I'm not. There are actually a lot of good ways to gain exposure, but they're not all cost efficient. So I think looking at a short equity fund is a good way to do it. Obviously, the way we're kind of going about it, because you just buy an ETF long in your account, right? It's as easy as can be. In terms of the short futures funds, as long as there's sort of enough supply to build the fund and rebalance it on a daily basis, and you have clarity and transparency on what's in the actual fund, how much of it is actually short Bitcoin, how much of it is, sort of filled with something else. You want to make sure you're getting pure exposure. I think that's important. And there are two really great options out there. And then I think investors can also short single name stocks if they'd like to. But I think, the broader picture about will, products be approved in terms of an Ether ETF or, some of the different types of cryptocurrencies out there. I think that this is just my sense that regulators might take some pause just because of what's going on with sort of the FTX issue. And they might seek to kind of come up with some rules and stabilize the industry before, kind of approving the more nuanced products.